Special report. Stock market correction is on. Can you see it? And the bull will be back. Well, after we have seen the stock market move up to all-time highs here, that is the major indexes, we have to say that this is unusual time. That mega cap strength is disguising a market correction that is going on. Yes, I was looking for a correction for the indexes in the area of about 11 to 13% on the downside. That still may be coming, and I'll show you that. But I want to take a deeper look into this, where we look at the weekly cycle charts of some other very significant indexes and segments of the market, so we can get an idea of what's been going on. So we're gonna look at some of those, and then we're gonna look at these mega caps, Apple, Microsoft, Amazon, and get some sense around how they've been masking what's going on in the market. If you take the NASDAQ and you look at the weightings of Apple, Microsoft, and Amazon, those are 30% of the NASDAQ index, and of course moving up to all-time highs. Facebook, Google, of course, those are all stocks that are also heavily weighted, but they're not nearly as heavily weighted. They're more in the 3-4%, 5% category. Apple, Microsoft, Amazon, the heaviest. When I look at those, I'm going to show you that we expect corrections still to come in those stocks in the area of 7 to 9% into mid-August and September. And I think when that comes, we're actually going to see what is a correction in the indexes, and also going to see what probably is a time frame that will set up for the bull to come back. So let's take a look as we take this deeper analysis at these charts. So let's look here. The first one we're going to look at is the XLB. And what I want to point out in here, first of all, is that we do cycle analysis. There's a lot of people that are probably looking at that for the first time right now. And what we look at is market rhythms. Right over here, these on the bottom are these half moons are called cycle brackets. They're just a drawing tool. They're not market cycles. They just help us see the rhythms in the market. We call those the ideal cycles. And the ideal cycles are different for every single symbol we look at. In this case, it's a 33-week average between lows. Cycles measure from low to low, as you can see right in here. So it's kind of a little lesson. These green ovals that I put in right over here, and often I put in yellow, which shows you the corrections. I put in these green ovals because I want you to see when you get into the rising portions after the corrections, you get rallies in the market. Now, sometimes they're deficient, as you see right over here. It eventually did continue to move on the upside. Sharp spike right over here, sharp spike right over here. Those are the rising phases. And you can see in here there's another rising phase coming. I want you to see the materials as we look at the XLB. And that says that what happened in here was there was actually a 7% correction in this segment of the market so far. Now, it could be going down further, and we don't know for sure because there's a variance between the time frame on the low in here, and it could come down for a few more weeks before it eventually turns up. But what we have in here is a very positive pattern, just as we had right in here. And you can see that when you get those positive patterns and you get upward momentum, as showing you on a reversal scout, you get advances. When you get into the declining phases and negative momentum, like the reversal scout showed you here, you get the corrections. When you break down under a key cycle low, like you had right over here, there's a potential for a larger correction right there. So that was the only one on this page that you can see. And when you break out above the last cycle high is when you get into the upside moves. Right now, we have a very positive configuration, and it says that after this correction is over, we're likely to get another move to all-time highs. So 7% correction so far, while the broad market is at all-time highs. The next rally potentially will be in the cyclicals, because this is a positive pattern. So I wanted to start out with that to give a little bit of a lesson so you could see in the XLB a key segment in the cyclical aspect of the market. Now let's take a look at a few more of these and you'll get an idea of this covert type quiet correction that's been going on in the market. Here you could see the XLF, and there's a lot of annotations in here because we look at this one very extensively, and our members really are very interested in this. You could see the cycle rhythms that are in here also, and this actually has had an 8.8 correction from peak to trough down over here, and that was pretty steep. And you could see it's kind of struggling there in the resistance level. Let's just zoom in a little bit right there. And this says that, well, you could get some higher, more attempted rallies out over here, but you see momentum is negative. And overall, it looks like the market should be kind of chopping around in here and then ultimately have a correction way out over here into October. So we'll see if the strength can come back, but the key is we've already had an 8.8% correction here looking at the XLF, and that might be an index that continues to struggle as we begin to see interest rates potentially moving even a little bit lower in here, and that weighs on this segment. Next thing we're going to look at is the Dow Jones Transportation Average. Now, these stocks have gotten hammered an area of about 10.8%. You can see right there that decline. Again, note the magnificent cyclicality in here. I have ovals that are yellow and green in here, and that's the declining phases and the rising phases. You can see right in here in this cycle where the declining phase came in, it got hit hard into the area right over here where the cycle timing low came. Same thing right over here, cycle low. Same thing right over here. This was the pandemic. It got slammed. Not much of a correction here. And then the correction right in here on time that is due to bottom very shortly. These lines right over here show you the actual cycle lows. These are the ideal that we have in the bottom. Please do go to askSlim.com to learn about cycle analysis under our cycle analysis workshop tab. So where are we right now? When I look at this, well, we've had this correction of 10.8% while the market is at all-time highs. So there has been a correction going on in the market. It's hard to see when the mega caps are disguising it. And what happens in the next few weeks? Well, after potentially a little bit more decline in here, we get into this next rising phase. And again, there's a lot of cyclicals in this category, so you got to wonder whether it's the cyclicals that are going to be driving the market up. The materials, the transportations, those things that are economically sensitive may be the ones that will be looking at some continued growth conditions in here, at least for a while. And these do point into rallies that go into October. So that might say something yet about the stock market, right? That when a correction does come here, then the overall stock market may be able to move to all-time highs into the fall. Is what that really looks like. Let's look at a couple of more in here, and we'll just look at the XLE, and you'll see what the energy stocks have done in the same cyclical patterns going on in here. That dashed line on the bottom is an oil market that you see right there. This has two cycles in it. This is called the cyclical harmonic family right in here, and you can see in here that the minor cycle came right here, bottomed right on time. The minor cycle right here bottomed on time, and the minor cycle right in here has a few weeks to go on the downside, as you can see right down over there. This correction in here on the XLE, pretty significant, from 56 here down to 49 right over here, which is overall quite a move on the downside in the area of 12%. So a 12% correction right over here in the energies at the same time that the market is at all-time highs. So again, what we're showing you is that the energy sector is in a correction, and actually if it gets under that 78.6%, the odds will be high that it's kind of a major top in there. Getting down to it is as it is right over here is pretty important. Momentum in here turned negative, pretty important. So it should be able to move to the downside still, and it already has a 12% drop. At the beginning of the show, I talked about oil market having topped, and that is supportive of the fact that it is likely we're going to see some more downside before the short-term low in this sector right over here. That's about a month away. So as you can see, energy's very weak, while the stock market has been very strong. The last one we'll look at, just a peek of Europe. As we look at the European top 50 weighted stocks, this is the Euro Stocks 50 fund right over here in terms of US dollars. Look at the magnificent cyclical action in here. You could see those yellow corrective zones. And again, that yellow corrective zone, maybe another couple of weeks to go. 7.7% the correction here. So the European stocks have been correcting in a modest way while the stock market has been holding up here in the U.S., well, at least the major indexes. You get an idea, this one right over here was down 14.8% during this period right over here, and this might have a little bit more to go before this correction is over with there. So that's a look at what's been going on under the market here. As the markets are at all-time highs. Actually, the S&P 500 is maybe off about 1% from its all-time high. Well, how is that possible? Well, Apple is heavily weighted in the S&P 500, and Microsoft, Amazon, and they are together 30% of the NASDAQ, and then a very significant portion of the stock market. So, what those three stocks do is what essentially you see in the indexes. And for index traders looking for a correction, and for those people that have been following my analysis looking for a correction, it's been frustrating. Because, well, there's no decline in what we trade, a lot of us, the indexes. Let's take a look at Apple, Microsoft, and Amazon and see if that correction should come. So I'm going to now look at the Apple chart in here, and I'm going to put AAPL on this weekly chart. And you can see that we look at in here, well, the same kind of analysis that we share. Those yellow areas are areas of correction. That is when these cycles come down, and when they come down into a nested area. So this is the XLK, that's that dashed line right there. So that's the tech stocks. And this right over here is Apple. So the Apple low came right over here. As they all nest on the bottom in here, you get your biggest corrections. You see that here, you see that here, you see that here, and you see that coming right over here. Apple came up right over here and hit that aqua colored zone. That is the fib extension. It did the same thing right over here. And now we think over this time frame here, it's likely to come down. Before this correction came right over here, we targeted March as the time for a decline to 115 to 118 from this level up over here, 144. And that's what it did. It actually made a March low right over there at about 116. So that was a bullseye on that analysis. We are now showing a target of 137 to 140 in the late August to September time frame right in here. And were that to happen, that would push out our stock market corrective timing by a few weeks from what we've been looking for. But you can see that's how it's pointing to a corrective phase right in here, as it did right in here and here and here. In each of these corrective periods that you see, Apple ready for a correction in the area of probably around 7, 8, 9% is what it's looking at right over there. We'll see if Apple has topped yet or not. Microsoft, the next one, we're looking at the three top weighted stocks, and you can see the same thing basically in here. Let's just zoom this in a little bit more. And our target right in over here for mid-August, right in this corrective phase, is 258 to 263. Here you could see in the same time frame right over here, it fell from 245 to about 225. So that was 20 points, about 10% that it fell, or 9%. And we're looking for something similar over here over these next several weeks into the mid-August time frame. Again, that would weigh on the indexes were that to happen. And we'll just look at the last one. And here I could, show you a lot of these heavier weighted stocks, and they're going to look similar to this. You can see in here in Amazon, look at those corrective phases and the declines of significance, as you can see in these nested areas. In this case, when there's 2 cycles coming down, there are 2 stars that we put right here, and here you can see 2 cycles coming down into late August, early September. Our target 33.70 to 34.50. That is not a very big decline for the likes of Amazon, and then after that it would set up for another move in here to all-time highs. So when you look at this and you look at the stocks like Amazon and Microsoft and Apple, they are all due for corrections, basically into mid-August through late August or early September, and then they point to their next rising phase. That essentially says to us that, well, the correction may or may not be as steep as we were looking for, but the timing is right for this to start happening right now. And what has been deterioration under the market, as I showed you, looks like it's going to move now into the mega caps and actually will affect the indexes if this analysis is correct. So now let's look at SPY, the stock market. We'll go from Amazon here to SPY. And here you can see, let me just get rid of this line right over here, because I've done a lot of work on this. You can see that where you had this big corrective zone where all this nesting was during the pandemic, and you had a 35% drop right over there. This, where they were nesting right over here, was 10.8%. This one, spectacularly strong, and momentum never gave it up. It was positive the whole time, only fell, depends on the index, 5.8% to 7% right in that area, so not very big declines. And where are we right now? Well, let's just take a close look right over here. The nesting time frame that we've been looking at falls into here right now. That's mid-August right there, and it's plus or minus a few weeks. Then you look at that. We had originally thought that it would not move past 423 on the SPY. We allowed for the possibility to get to the top of the fib extension zone, 430 to 432. That was what we thought would happen at an extreme. Actually, now at the extreme, it's moved through the next fib extension and started to back off. So it got up to about 438 on the upside and just barely stalling. But again, the indexes are being held up, in this case the S&P 500, by the mega caps. Here is that corrective period I showed you in Amazon and Apple and Microsoft, likely to come down into mid-August to early September. Were the decline to be as severe as originally expected to the major 23.6%, that now would be about a 12% decline. If it falls to what would be the 50% level of this cycle, which would be exceptionally strong, that would be a 7.7% decline. So that means that looking at this, we have slightly widened the range or upgraded a little bit of the potential for it to follow the mega caps and give up that kind of 7%, 8% area if it fell down into here, into this August to September or early September area right over here. But this right over here still is that area of the expected drop. And as I showed you, when you look at those other indexes and those other stocks, we really have seen that we are in a time frame where the stock market has been correcting, but it's been really under the market. The correction has been on, but the indexes have held up extremely strong because of those mega cap stocks. So there is risk over the next month approximately. But then based on what I showed you, the cyclical stocks, a lot of those looking like they will bottom sometime in the next couple of weeks to as late as early September. It then says that the stock market will likely move to highs, all-time highs, once again. We looked for the ultimate high for the stock market to be in the first half of the stock market. And obviously, when we redo the analysis and the data changes, we change with it. And right now it says to us that though we still think that the second half of the year will be down, we think that peak now probably comes out in the October timeframe. So a decline, we're talking about 1 to 3 month view on the market right now. It would be a decline over the next month or so, pretty much in time frame that we've been looking at, and then another rally for the next couple of months. If you want to learn a lot more about that cycle analysis I just shared, in that in-depth analysis and really breaking down these markets so that you can get a broad understanding of it, please do go to our cycle analysis workshop tab at askSlim.com, and you will be able to see a video on there and what the 20 video modules are that we recorded that teach cycle analysis. That I think will be spectacularly interesting to you, and that you will be able to see that there is a ton to learn in that regard. So that is a look at the special report on the stock market, really a deep look. Stock market correction is on. It's quite covert. And then after these mega stocks pull back, then the bull will be back.